Right, so today we'll be focusing on introduction of our financial indicators. Right, so under financial indicators, we have the following category. We have our profitability, ratios, and then we have our liquidity ratios. Then we have our solvency ratio. Then we have our risk. It's either it's risk or gearing ratio. Right. So now we need to list our, before listing, check our profitability ratios. In most cases, our profitability ratios, you will find them under income statement. So it's income statement. And then 1, 2, 3, those three are under what? Are under our balance sheet. Right. So now, what is liquidity? So now liquidity, it means now you can pay or maybe receive cash in a space of 12 months, so short term. So liquidity stands for short, so meaning it's what? It's from 1 month. So you will pay your debts within 1 month up until 12 months, right? Then solvency, it's what? Solvency stands for long term. So now you can pay your loan from either a year, so it's 1 year, up until maybe 5 years, depending on the company, right? So now risk and profitability is willing to list now the ratios under these categories. So now profitability ratios, right? So we have the following as our profitability. Number one, we have our markup. So it's what? Markup, percentage on cost, right? Then we also have our gross profit on turnover. So remember, our turnover, it's sales. And then we have our operating profit on sales. So I won't list the other ratios. I will just list those ratios that are important under this topic. So now we move to liquidity ratio. So liquidity, you have the following as our liquidity, current current ratio. So we have our current ratio, and then we have our acid test ratio, and then we have our debtors collection period, and then we have our creditors payment period, and then we have our stock and over. Then we have our SWOT, stock holding. It's holding period. Right. So these are the important ratios under the liquidity. And then we move to solvency. So solvency, it's long term. So under here, it's only solvency only. So it's only solvency. Right. So you have solvency, ratio. Right. Then risk or gearing. Oh, there's another category here, which is returns. Returns. What are returns? Returns are profit. So whenever you decided to invest an amount, you need profit. So profit, in other words, it's what? It's returns. So we move to risk. So under risk, we have our debt. We have our debt equity ratio. And then we have this one called ROTE. Right, ROTE, which is return on total capital employed. Right. And then returns. Returns. So under returns, we have the following: DPS, which is dividends per share. We have EPS, which is earnings per share. We have raw share, which is return on shareholders' equity share. Then we also have another category here, which is so it's what market. So it's market price. So now market price, we have our net asset value per share. So these are your categories under financial indicators. So remember, liquidity, solvency, risk, returns, as well as market price. So it's 1, 2, 3, 4, 5. These 5 are under balance sheet. So to calculate the following, you will need the balance sheet for these ratios. So now our next video uploaded will give you the following formulas for each and every ratio listed under each category. Thank you.